Members, I declare the meeting open to the public. Can I call a member to speak to nominate a temporary chairperson?
I propose Gordon Dunn. I second that. There we go.
Seconded. Have we any further nominations? No, so can I ask the nominated member then to take the chair, please?
That's true. Really disappointed. What do you want to do?
Right, so you're at the annual apologies now, page 2. I will bring to your attention there, we've mentioned that if you look at Angela's copy.
Yeah, that's okay. Right, members, thank you very much for the nomination to act as chair today, and we'll do our best to try and get through the business as efficiently and effectively as we can. So we do have a number of apologies. Jim, we have apologies from the chairperson, deputy chairperson, both are in Europe on business, and Fergal McKinney, who I understand may call in later.
He may be able to attend his other business.
Any other apologies?
Paul Free may be in later on.
Yeah, Paul has indicated that he may be unable to attend, but he'll try and attend for part of the meeting if possible.
Okay. Right, so takes us on then to agenda item 2, chairperson's business. Going for growth, inform members that the committee discussed, which we discussed at the last meeting, the possibility of this committee and the committee of DARD holding joint sessions to scrutinise going for growth. Any points on that, Jim?
Chair, I met with the clerk to the Agriculture Committee because they had brought to the committee's attention, and it'll be dealt with later on, the possibility of a stakeholder event between the two committees. So rather than going back and forward, it might be appropriate if the two chairs and clerks met and agreed proposals to bring to the two committees at a later meeting. Members are content with that?
Agreed.
Great, right, thank you. Okay. Scrum 2014, it sounds like, I thought it was a rugby conference, but it's not. Scrum 2014, it's hard to say. Everyone's invited to attend, is that basically it, Jim?
Yes, Chair, that's something that I'm not sure if the Chair can attend yet. The Deputy Chair certainly can't attend, but other members are also invited to it on Thursday the 27th of November. So if members contact the committee office if they're able to attend that. So it's a Momentum event. Momentum represents the small business sort of digital technology sector.
Okay, the members inform the committee office if they're available. Great, right, thank you. A circular has been issued to the committee office regarding the Assembly Christmas card. That is a priority. I understand the chairman likes to send out a hard copy card, and we all agree that we're supportive of that. Agreed, and Christmas is coming, which we're glad to hear. Right.
Sorry, Chair, are members content also to include those people who briefed the committee members during their visit to the US in June?
Yeah, absolutely. Great.
Great.
Right, thank you. Right, agenda 3, the draft minutes. I'm sure you've all read them and studied them. Are we all happy that they're a true and accurate record?
Agreed. Yes.
Great, right, thank you. Right, takes us on to the main business that we're here for. Is a briefing session with our specialist advisor, Dr. Leslie Budd, who's very welcome to the meeting today, and we appreciate you travelling over and making time to come here. So, Leslie, would you like to do an introduction and a briefing on your paper, a summary, please?
Okay. The paper's rather long, but I tried to get in some of the details. What I did was try and link together the programme for government and its priorities, the strategy itself, but also look at some of the missing links in the strategy and the connections between different sectors of the economy that would help the economy grow and achieve its objectives, even in difficult and uncertain times. And in that respect, I also brought up the two devils, if you like, in economics of equity and efficiency, which are often counterposed to each other. And as I said, putting the brief in, recent work by the OECD and the IMF points out that growing inequality is actually bad for economic growth, and that equity itself can actually increase the total amount of national income. So, in other words, if you have underutilised resources, unemployed people, inactive people, one could argue that the potential growth of the economy is unlikely to be achieved. And that's a common problem, I think, throughout the whole of the European Union. So just going through the summary points, and I can come back with questions of the key points at the end. I think the strategy itself is fairly comprehensive. But my concern, if you like, as an economist, is the underlying economic reasoning isn't brought out, and the strong linkages to programme for government isn't brought out. Excuse me, there's a number of challenges. The other problem is, and this is a common problem in any economic strategy, it looks at targets, it looks at implementations, but what one would like to see is a kind of scenario analysis over the medium term of what the outcomes are likely to be. Difficult though it is, engaging involves forecasting, and some kind of reiteration, some kind of constant evaluation. I've done a lot of evaluation work recently for particularly the European Commission. And there's a tendency to do evaluation at the end of projects rather than at the start and continuous. So I think there's an evaluation loop, and that kind of framework would be useful for any strategy and its linkages to the programme for government. There's little in the strategy on counter-cyclical adjustment, the economic cycle. The Northern Ireland economy has done pretty well recently, slightly below trend of the UK, but given the challenges of a relatively small economy, that's to be welcomed. But of course, we're facing a very uncertain environment, as noted at the G20 summit. But it seems to me that some of the counter-cyclical measures, what's called automatic stabilisers, that's taxation, welfare and other expenditures, is not brought out in the strategy as a kind of part of the risk management that one would like to see. Number of strategies, strong linkages and synergies, but they're not sufficiently spelt out. So my work recently, and when I came and gave the Knowledge Exchange seminar series, is actually the role of sport. It's linked to culture, leisure and retail. And in Milton Keynes, which is the home city of my university, the international sporting strategy is now central to their economic strategy, with the Rugby World Cup, with a number of other activities. So that's just one example. A number of the objectives are very ambitious. There's nothing wrong with ambitious objectives, but they can only be achieved if you have above trend growth of GDP or GVA in Northern Ireland. So one of them is about median earnings for domestically based staff working in foreign companies, and 75% of median earnings. And if you've got below trend growth, that's going to be quite difficult unless you actually attract a lot of relatively high paid workers from abroad, or there's some kind of rapid upskilling for domestic based workers. And as I said, I tried to put these together in an overall schematic, and that reflects, as I said, my background. I started my career in structural engineering, so I tend to think elementally. And just trying to actually look at the kind of linkages, and from that in future trying to undertake some analysis of the linkages and what could be done. So that's my summary point. So I can come back after questionings for the key points, which is at the end of the briefing.
Okay, thanks very much. Okay, we'll open it up to members then.
Yeah. And Martins.
Martin, yeah.
Mr. Chairman, I take it the Northern Ireland Economic Strategy, I take it that's in this 1,000-page pack I have upstairs, Jim, which you've left for me, but I would certainly like to get a copy of that.
I haven't read it yet, no.
A hard copy if possible. I would be very tempted to say I hadn't heard of it, but I'm not going to say that 'cause since we're live. No, I suppose, Leslie, what I really want you to do is look at your crystal ball, and there are as many predictions about the next 5 years or up to 2020 for the economy, and corporation tax and that debate is certainly giving things an added frisson, not an interest. But what is your feeling about the next 24 months even in this economy? Are we going to, as was you mentioned the G20, are we into another period of little progress? You said we've been doing better than other regions. How do you feel the economy is doing? Because we did have a report presentation last week on 63 job announcements, FDI job announcements. There are different reasons to be confident around what used to be blue-collar jobs, and the tourism continues to do well. But what I was interested in is what's your feeling about the next period? And I suppose our focus is on jobs.
Well, we all live with uncertainty, and increasingly that the volatility we've experienced seems to be the new norm for the moment. But beyond five years, it seems to me that looking through a lot of the analysis, that devolution, the post-independent referendum, is a real opportunity, particularly for someone like Northern Ireland. When I came and gave the seminar, I was saying what could the fastest growing sub-region in the UK, which is Milton Keynes City region, what could Northern Ireland learn from that? Actually, could turn it around the other way, because next there's the Rugby World Cup, there's the City of Culture, and there's a kind of dynamism here which is overlooked. So, for example, for many years, small business sustainability has been the highest of any region in the UK. But if you ask people, they say it's London. It's not, in fact. In terms of jobs, I think Northern Ireland is benefited in the sense it hasn't been in, well, the UK not being in the Eurozone, in that if you actually look at living standards. Now, despite growth in the Republic of 4.5% this year, since the peak, average incomes have been reduced by 15.5%. Now, that's the basis of aggregate demand. So it seems to me there's a number of opportunities, there's a number of sectors, there's a number of possibilities which you could create jobs. So I know you've been to Santiago, looked at things like ICT jobs coming here, or small businesses from America. There's the cross-border cooperation, the possibilities of special economic zones. There's obviously corporation tax, and that's a complex issue. But it seems to me a starting point in which Northern Ireland could actually take better control of its economic development, rather than being at the behest of Westminster. And my own view is that the present situation in the Constitution in the UK will not hold. And that gives a real opportunity for a number of regions that were supposedly underperforming. And I think in those key sectors, the other thing I think that needs to be looked at in the strategy is not just to focus on exports, net trade, but also within FDI. People forget that within FDI you get multinational companies that trade across international borders. So Bombardier makes trains in Derby, you've got Airspace here. Airbus set up its first factory in China. So you've actually got a lot of expertise here. You've actually got the kind of key high-tech sectors, of which there will be secondary effects. Those tech sectors don't tend to directly create jobs, but they create economic activity in demand for secondary services or whatever. But there are some gaps. I think there's very little in the strategy about the role of financial services. And again, if you look, I don't want to look at Scotland too much because that's often too used as comparison. But if you look at the tensions between Edinburgh and Glasgow, Edinburgh is the second biggest financial centre in the UK. It's the second biggest foreign exchange dealing centre in Europe. And Glasgow is a relatively poor relation, but a lot of back office functions, a lot of the settlement have gone to Glasgow. And in financial markets, in centres, that is where the money's made. It's not made in trading anymore. Let me just give you one example of that. The London Metals Exchange has been taken over by the Hong Kong Stock Exchange. They've set up a settlement system, particularly for doing trading in China, a big market. And it seems to me that that is a kind of trend one could look at. And secondly, that because of the characteristics, things like inward investment, particularly for China, in those kind of key sectors and its relation to business services, is something that could appeal. And again, there may be a knock-on effect there. If you get that kind of foreign direct investment, you stimulate air traffic between those host countries. Lastly, again, I've brought up in the points, there's a focus on inward FDI, but if you're someone like Bombardier and you're rooted here for a long period, there's an opportunity for outward FDI, of which money would come back to Northern Irish economy. So there's obviously potential there, but I think devolution is part of that process. But clearly that has a number of political risks, has long-term negotiations and some conditionality.
Okay. Right, thank you. Stephen and then William.
Thank you, Chair. Thank you, Leslie. A number of issues you mentioned, the quite a stretching target in terms of median earnings. We'd have to have above trend growth. How would, if we were to introduce a living wage, whether it be through investing in supported companies or through public sector employment, or, there's various options of how we could start to introduce that. Would that be a tool in helping us achieve that target?
Yeah, I mean, my view is that you can't look at labour markets individually. Obviously, for small businesses, there's a difficulty, there's a transition of a sudden cost. But if you look at increasing the international evidence, a living wage in aggregate increases aggregate demand, particularly in places where there's been high rates of unemployment. It's happened in London, it's been supported by the mayor there. And so you actually get local income effects that creates other kind of employment. That's one kind of stage. There's obviously the and there is a virtuous circle in terms of the income that small firms may get, but obviously it's the difficulty of the transitional stage.
Sort of connected, obviously corporation taxes seem to be the big ticket item. I mean, I'm an exception in the Assembly in that I don't support the lowering it to certainly to 12.5%. But I'm in a minority of maybe one or two. One of my concerns is corporation tax will bring in a lot of low-wage jobs, potentially low-value jobs. Would introducing a living wage proposal in any way counter what we're trying to do with corporation tax, or is there any tension between those two policies?
There's potential tension, but I think they complement. I mean, my own view is that just cutting corporation tax in itself is a race to the bottom and tax competition. But if you, particularly in regard to Northern Ireland, and one of the issues about cross-border trade was the exchange rate. If you, and given that the Republic is a major trading partner, you're changing the relative prices, you're changing a kind of implicit exchange rate onto a more equal basis. My own view is you can have conditionality, because it's not the headline rate, it's the effective rate, and that means about allowances. So, for example, for your party, you could have an R&D credit for green investment. And again, you can have a lower rate, so it's the overall rate, and it could be associated with conditionality about certain kind of jobs. I think the evidence, I don't think the issue is about low-paid jobs. I think the issue is about tax avoidance with the end of the double Irish. And that is an issue. But if you actually can, if you make corporation tax conditional with your key sectors and you give certain allowances, that actually can be beneficial. But I think it has to be buttressed. For example, reserve powers, because clearly there's a transitional arrangement where you could lose something like £300 million of the block grant, and the economy would have to be at a certain level. It's risky, but I think and it seems to me, reading between the lines, it's a headline rate. It's a kind of political metaphor. Mm-hmm. So behind that, if you have conditionality, and things like apprenticeships, skills formation, so they aren't necessarily low-value jobs. I think you can get low-value jobs are not increasingly not going to be internationally competitive because it depends on unit exchange rates, not corporation tax. If lower corporation tax made your exchange rate more competitive, then there may be an argument. But I think making those links is actually quite difficult. And in a sense, if you have a living wage and you stimulate demand, you're going to increase profits. And allowing, so the actual total taxation will increase, even though you've got a lower rate. So, I mean, that's the point. And I think, again, it's the politics of it and the transition of what you're actually going to do. And clearly, Scotland would like its own income tax and other kinds of forms of taxes. One thing you've looked at here is land value tax. Now, that could be very beneficial, but there will be winners and losers.
Mm-hmm. Just on the point about the long-term goal of corporation tax is that ultimately you increase the tax take whilst immediately you reduce it, in theory over time, it increases. In terms of looking at other economies, the Republic of Ireland, and I think it's Singapore's the other one that we tend to look at when we're discussing this issue. Is the evidence there that the tax take increases, the actual tax that comes into the state, not the tax that should be paid, in theory, with all these companies coming in? But, you mentioned some of the loopholes and whatever else. And then there's an added factor in Northern Ireland whereby if a company is deemed to have moved from the UK or even would have invested in, GB, would have invested in GB but choose Northern Ireland because of the lower corporation tax, that we still have to compensate the Treasury for that. I suppose given those extra complications we have here, how likely is it that even in the medium to long term, that we could increase our tax take?
Well, I mean, you're only talking about one tax. I mean, in any advanced economy, you always want to broaden the tax base. I mean, tax is not just withdrawal it's used for other kind of purposes, and it does support private economic activity. There's a lot of myths about the United States, nominal tax rates. But coming back, Singapore is a special case. It's a small city state. It makes most of its money on corporation tax from Australian and other mining companies. That's where they're all located. They've moved from Brisbane. BHP Billiton, Rio Tinto. They're increasingly moving out of London. So I think Singapore's a special case, and I don't think you compare it.
Okay.
The Republic, I think there's a lot of myths around what's happened to the Republic. If you look at the significant growth, what was it based on? Education, skills, particularly IT, particularly trying to locate, and being access to market. The exploitation, and I use that word technically, of tax systems actually seem to be a later kind of benefit. You have to ask yourself the counterfactual: if that didn't exist, would they move? And again, that really depends where you are. I think the atmosphere is changing. The EU itself, the Commission, is looking at actually having harmonised tax rates, trying to reduce tax competition. There is a certain irony of having a new Commission President as the former Prime Minister and Finance Minister of Luxembourg, and that's a particular problem. But let me give you an example. When mainstream corporation tax in the UK as a whole was 52%, Ford's never paid mainstream corporation tax, ever, because they used advanced corporation tax. And there was a distortion in that they, before just-in-time production came in, they held much higher rates of stocks because the increase in the value of the stocks held in the warehouses was set up against taxation. So I don't think it's about effective rates and conditionality and what it can do over the long term. And I think one has to be careful about comparisons. I mean, Singapore is a particularity.
One final question, Chair, if you'll indulge me. We obviously don't measure GDP in Northern Ireland. We recently had a witness who suggested that's something we need to move towards. Sometimes being in a bind, if we want to use that term, can be an advantage, and we can look at different ways of doing things. Obviously, GDP is in many ways, a poor measure of the economic well-being of a society. It might measure growth in one sense, but measures things like pollution is a positive thing. Cleaning up pollution adds to our GDP. Right? Is there, given we are in a different position, instead of moving towards GDP, is there a better, more holistic way that we can measure growth in our economy, or is GDP a bit like the worst form of measurement, except all others?
No, I mean, there's been work particularly done at the LSE and in the United States about developing a broader measure of GDP. I mean, the useful thing about GDP is it's a time series. It's a measure of which you can look at stuff comparatively, not components of it. And the only difference with GVA is indirect taxes and subsidies, government. And GVA per hour per person worked is a useful measure of productivity. So the useful thing about GVA is false. You link it into productivity. GDP per hour worked causes distortions. There's a lot of work being done on measures of well-being. There was a 2009 paper done by Fitoussi, Stiglitz and Amartya Sen about measures of well-being, but these debates have been around for a long time. I mean, I think there's a better measure, but the obvious thing is it's like any measure, how you use them. And if you look, and you have a composite indicator, you have GVA, and the Eurostat uses GVA at NUTS level 3, so the information I got of that diagram came from Eurostat. So there are different kind of sources, and there are kind of different estimates. I think it's the statisticians to say, well, these are these kind of measures, and so on and so forth. But, for example, quality of life, given the rule, you can actually, at a stroke, boost the contribution of rural areas because of quality of life. But quality of life is also, as put in the briefing, an attractor for professional managerial staff coming from abroad. You've got very good schools performance, you've got quality of life. And so on and so forth.
Okay.
Yeah, thank you.
Thanks, Stephen. William, you're next.
Yeah, thanks, Chair. Thank you very much for your presentation. Can I ask you, in terms of corporation tax, the key thing about corporation tax is the deal that we'll be offered or negotiate with the national government in London, because obviously the block grant is fixed and corporation tax is variable. What for you is an ideal, given that at any certain time in history things can change, what for you would be an ideal scenario for the Northern Ireland Executive to negotiate?
Well, it seems to me the transitional arrangements are important. It seems to me as well that everyone blames the Treasury, but it's a culture that goes back a long time. Keynes wrote about the Treasury. Effectively, it's a finance ministry. But it seems to me the transitional arrangements should be generous, given the kind of legacy that Northern Ireland has had and the challenges it's had. And that since the Good Friday Agreement, one's had political stability here. And you can see that in the benefit of the economy and the range of things, and increasingly becoming an international attraction for events, Giro d'Italia, Rugby World Cup, etc., etc. And I think it seems to me it seems to me also about conditionality, so that you would offer early on low rates of corporation tax to those kind of activities that would boost the economy, whilst at the same time not being penalised by an immediate reduction in the block grant. Now, given there's an election next year, and as I said, it seems to me that there will be some kind of new constitutional settlement in the UK as a whole, I think that's an opportune time. But I know the Prime Minister will be announcing in the next few weeks. But the devil is clearly in the detail. But it seems to me as well that if you had reserve borrowing powers, that could actually, any downturn in the economy where you were able to raise some borrowing to cover any shortfall would be a useful thing to do. And I have to thank Jim for that observation.
I think, so you're kind of hinting, I think it was a couple of times, at a more federal type United.
Yes.
Yeah. In terms of there's every possibility, as members have discussed, and as you've mentioned, I think as well, that the tax take could go down because it's obviously a variable in terms of the economy. You know, it is a huge risk, and obviously there are people who have differing views on it. Can I ask you, when you were talking about the executive and its strategy? If I picked you up correctly, you were saying that perhaps the strategy and reviewing the strategy alongside circumstances that prevail at a given moment in time, that perhaps that we could be stronger there, or the executive could be stronger. Can you expand on that?
Well, I just think in the strategy, it doesn't. The strategy is itself and hasn't an underlying economic analysis. It has a number of objectives. It's like any strategy. And it has a number of targets about expenditure and jobs promoted, not necessarily created. And there's some repetition of that. There's 2 pages, I can find the pages here, there's 2 pages where it looks at the linkages with corporation tax and spends a number, but it doesn't look at the downside risks, it doesn't look at the scenarios, it doesn't forecast the possibilities in order to make a informed decision. And it seems to me that if it actually looked to the matrix projections over the medium term, if it looked to the other activities and what you think the 3 to 5 years out might be the tax take, that would give you some informed decision in negotiation. And whether, and I think part of the problem for this committee is those decisions on the tax basis hasn't been discussed in finance. I noticed that Alan Trent from University College came yesterday, or 2 days ago, gave evidence, and he's a constitutional expert, but he's not an economist. So it seems to me that if in the strategy you're going to say we want a more internationally competitive economy that's export-led to attract FDI, but our only instrument is corporation tax of itself, that is a very, very risky strategy in an uncertain environment. And it seems to me that an analysis of the risks, what the likely tax take is, if you could have, say, for example, zero corporation tax for small businesses up to a certain size, or for startups. I mean, those kind of things that would actually broaden the tax base of corporation tax would have variable rates.
Well, in your experience or knowledge, I mean, would the Northern Ireland Executive and how it operates be different than any other administration and how it reviews?
No. I mean, I'm not blaming them, but it seems to me that there's an opportunity here, and a number of challenges. But with a constitutional settlement, there will be more, it seems to me there will be more discretion over a number of economic objectives and activities that you formerly did not have, and particularly over reserve borrowing powers. And I don't want to use the example of Scotland, but I will. You've seen that in Scotland, but my PhD was actually on the impact of decentralisation in France. And actually they gave Chambers of Commerce tax-raising powers, 2%. They run most of the airports. And that brings benefits. And the case study is Nord-Pas-de-Calais. The regional governments were given tax-raising powers for the first time in 1986. And decentralisation, despite, has actually worked in France. I mean, it's not a fully federal system. So there's ways of doing that. But so in a devolved nation like Northern Ireland, there's an opportunity for the executive to, I won't say take a stronger lead, but actually have a more powerful economic momentum than formerly, because it was, if you like, the block grant makes you subsidiary to economic policy made elsewhere. And you could have more local discretion over economic policy, which benefits Northern Ireland because of its particularities. There's an argument made, I mean, I'm a dyed-in-the-wool Londoner, my family from Scotland, but I think a lot of the boosterism of London, and that London subsidises the rest of the UK, is bad politics and bad economics. And London gets enormous implicit subsidies. Crossrail's 30 million. That's nearly three quarters of the total GDP for Northern Ireland. So, I mean, that's my personal view about devolution. I tend to be in favour of federal systems because you have this principle of subsidiarity and what's appropriate. And I think the other opportunity of Northern Ireland is your political experience that other regions in the UK, in England, does not have, and Scotland relatively recently. So I would be optimistic, but I'm someone who believes in rationality, and that might be naive.
There are more questions, Chair, but I know you want to move on. So.
Okay, thanks, William.
Thank you.
Danny, you're next.
Thank you. I just wanted to follow up. I'm intrigued by the Deputy First Minister's response on Monday when he said that we were talking to Scotland and Wales. Is there a backlash, or do you see that if we all start working together and you end up with the Celtic nations all pushing and England? I know it comes down to how people perceive, but the perception is that all of us get from London and others. Do you see that as a danger? We need to be a little bit more canny on how we all work together so that we're working.
Well, being half Celt, I would say all Celts are canny, but I think there's a danger of a backlash, and there has been during the referendum. But I think that backlash comes from that there's a kind of political stasis, particularly in England at the moment, and rising inequality. There was declining real wages, and the recent report about the poor being hit in the UK, well, in England generally. I mean, London's very different, as you know. But I think shared experience is always useful. One of my bugbears about public policy is we always look to the United States and get it wrong. There's a lot more other European experience, and I actually think that there's a lot of public policy lessons in Central Eastern Europe. We did some work with Croatia, particularly the city of Rijeka. And Croatia joining the EU is actually, and I'm not against them joining the EU, but actually has had some unfortunate consequences for cities, industrial cities like Rijeka, with competition policy. I think if it's part of a general constitutional settlement, there's a lot that England could learn from Northern Ireland, for example, as I said before, and the kind of regions. At the moment, I think the backlash will come in that there's a push for metro dev, which is, just have Manchester, big city regions. Forgets the rural areas, forgets the hinterlands. And I think that's really quite crucial, and it's forgotten. And it's something in discussions with people, and particularly think tanks say you're just looking at the city, you're just boosting a particular city elite. There's a real danger there. So I think, perception is everything. But I think the other thing is by saying, well, we can be the dynamic Celtic fringe, and is actually important for the links of those devolved nations to the rest of the UK. Otherwise, I think, my own view was that if I was worried about independence in Scotland because it could lead to the breakup of England, and that would be my concern. Then it'd be London versus the rest, and I think that's a very bad outcome.
Thank you. Thank you very much.
Okay, thanks, Stanley. Just a couple of points. You make mention of establishing a national investment bank. The opportunities may come about if we get the change in corporation tax. What would be the benefits of that, do you feel? What new opportunities would it create? The establishment of a
the
national investment bank?
Most advanced economies have national investment banks, either effectively privately run or publicly run. So in the States, Freddie Mac, the federal corporation, actually funded a lot of mixed urban development, etc., and they issued bonds and mortgages. The Engineering Employers Federation in the UK has proposed for a long time a green investment bank for infrastructure, to fund infrastructure. And you could have hypotheticated regional bond markets. Now, the best example I would look at is in France. It's called the Caisse des Dépôts et Consignations. And that is a national investment bank. So there's certain kind of words and phrases that I just happen to like. And that is a national investment bank that raises private and public finance. It issues bonds and it invests worldwide in infrastructure projects. Under that, you've got what's called the mixed economy societies. That paid for the high-speed network. It's 50% private equity, 50% state equity. Now, the advantage of bond markets, if they have to be hypothecated to a revenue stream. It could be utility, it could be utilities, it could actually be anything. And from that, you actually you increase financial intermediation, so the public can actually have access to buy those bonds and invest in them, and there's a return. So there's secondary kinds of effects. And we used to have in the UK the local authority bond market, and it still exists in the Public Works Loan Board, of which the Japanese invested in heavily. That was stopped with the 1981 Local Government Finance and Planning Act because it thought that local authorities were being irresponsible. But actually they were tied to a set of investment assets. So it's a possibility, and I think it's a possibility of linking revenue streams to that. I think we will see in devolution some kind of regional kind of bond markets. There's a lot on crowdfunding for investment, but I think that's unstable, it's highly risky. You need something underwritten by government and a default position, but the default position is always a claim on the assets, so it's no different, and it could be public-private.
Okay, thanks very much.
Can I come in on the
Yes,
back of
Danny.
that? Thank you. Just was thinking, because at the moment, as I understand it, it's only the councils or the new super councils that can really gear money.
Yes.
But they're all borrowed to the hilt.
Yes.
Is that a difficulty? Is that going to limit us from being able to gear more money?
I think again, it depends what, there's always difficulties with hypothecation, but if you wanted to fund some new infrastructure, if you wanted to fund cross-border innovation funds, you could get matching funding. I did some work with Mark Hart, who's the director of the Centre for Small Businesses, who's originally from Northern Ireland, on the Regional Venture Capital Fund, an evaluation of that. It never really came to fruition, but that was underwritten by the Post Office pension fund, local authority pension funds, and specialist regional venture capital funds, so it's 50-50. Now, I couldn't tell you whether it was a success because the Small Business Service decided not to use our evaluation. They didn't evaluate it, and a lot were cashed out. So there are examples and of where you could do that.
Okay, that's great. Thanks very much, Leslie. Indeed, it was very informative. And that takes us on to the next item on the agenda, which is our oral briefing for the Northern Ireland Economic Centre for Policy. Perhaps you'd like to come up here, Leslie, to the front and make an input to the next discussion.
Finish my tea.
Okay, well, with us we have Professor Neil Gibson, who I think we all know. We've met him a few times. He's been at the committee here over the years, and we welcome you along, Neil, and we're looking forward to your contribution. For members' information, there are a number of documents there. Clerk's briefings at page 25 already have discussed some of the issues in relation to that. There's a written brief on page 26, and on page 33 with the UK Knowledge Index for Northern Ireland. So, Neil, it's over to you to take us through your presentation, and there'll be time for questions afterwards.
Thank you. Morning, everyone. It's nice to be back again. It's nice to be back this time, as the centre's actually done some work now, as opposed to the last time when I was here, when we were making promises of what we were going to do. So I wasn't going to spend too long, rather just set out just tell you a little bit what we've been doing, because there may be some members of my team you'll want to call back at a different stage to focus on particular pieces of work, but also then take you through where our forecasts are at the moment, some of the challenges we see, and then happy to take questions. As it says in the little document, we thought it was worth reminding members just what NICEP is. It was set up last January as an independent research centre, originally funded by DETI, Belfast Harbour and First Trust, but consequently DEL and DFP have both come on board since then with particular research asks, DFP in particular to small business rate relief, and DEL with a new piece of work we're just starting on a skills barometer, and I'll outline those pieces in a moment. So our job is really to work for the betterment of Northern Ireland, to try and what we try to do is do research projects that are both on the agenda of those departments and those sponsor organisations, but also ones that we think are important. So it's partly us dictating the research agenda and partly reactive. We also do economic teaching, trying to change the way economics is being taught and make it more practical, more applied, better understanding of Northern Ireland, how it functions. We're also doing sponsor research or commercial research for a number of organisations. I'm EY's special advisor in Ireland, for example, and we write a lot of global consultancy work for PwC in New York. We also do media and commentary, which is where I'm most known, I think. I'd like to think it was for all the clever models I built, but I'm sure it's more from my appearances on the TV. Since we've met previously, just to let you know where we are, we continue to build our forecast model for the Northern Ireland economy. So we have some views on the data availability and some things that members might want to pick up in questions. But that model continues to be developed, and that's where the forecasts that you see in the document are produced from. It's our own model, it's not taking anyone else's, and it's a fully formed structural model of the economy, as opposed to forecasts that are just our views. They're actually a proper model. We've also been updating our corporation tax modelling work. Now, that report is with the Minister at the moment, so I can't talk about the results of that. The great sensitivity remains around the costs, which we members raised points about earlier, and again, we'll pick that up in questioning, I'm sure. We also have the Knowledge Economy Index work, which shows Northern Ireland as the second fastest growing region in that key area, which was carried out by one of my colleagues, Richard Johnson, and you have a copy of that report. That's in the public domain. We've just finished the small business rate relief work. Again, that report is with the Minister for Finance. We've just started a major piece of work for the EAG committee, looking at benchmarking Northern Ireland's competitiveness, trying to take some of the international metrics, but also tailor it a bit more in the way that Forfast does, to really look at what matters for Northern Ireland's competitiveness, look at the areas that we actually have some control over. We finished a study on air connectivity, again with the Minister, looking at, in particular, the impact of changing pricing and air passenger duty on airflows and the wider effects. And then an issue that was raised actually in the previous session, I was asked by Minister Hamilton to be on the steering group, along with a number of others, for a project by Carnegie looking at well-being and how we might think differently about what should be at the centre of our economic outlook. So that's a kind of run through, and I hope you'll agree that in our 18 months of existence, that's a reasonably good slate of work that we've now got to near completion. And I apologise for the studies that are with ministers and that I can't go into detail, but I can obviously talk in general. What I did want to say then is just where we see the economy going at the moment. There's no doubt, no matter what indicators you look at, the economy is growing, whether that's in jobs, whether it's in GDP terms, whether it's in terms of export values, whether it's in terms of self-employment till the very last quarter. All of the indicators, car registrations, house prices, are all moving in positive directions. So we've definitely had, this will be the second year of growth. Our forecasts suggest that the prospects for 2015 look relatively positive too. We have a long pipeline of job announcements from InvestNI coming through. We continue to have a little bit of confidence around the consumer and business sectors, but the waters get a little bit more choppy after that. It gets a little bit more difficult, and that's really due to two effects. One, the more significant impact of austerity that we'll feel after 2015, and then secondly, the pressures that our model suggests consumers are going to be under, whether that's from modestly rising interest rates or just the fact that they're going to have more leveraged positions than they have today, given the level of borrowing that's going on. So we have a consumer and a government pressure coming in 2016 that leads our forecast not to suggest another fall back into recession, but a rather more difficult climb against heavier or stronger headwinds. What I would say, and I'm sure we'll come back to it, is we can talk about the merits otherwise of austerity, and I certainly have views on that. But one thing from my economic perspective, if you're going to do it, it is better to be doing it when the economy is growing than when it is not. So the pain that Ireland endured of not only having severe austerity, but also an economy that was losing jobs significantly at that time, is particularly damaging. And at least we can be thankful that we were spared the experience of having to cut drastically during the time when the economy was losing jobs. The fact that it's growing means that whilst this is never a pleasant environment to think about cuts and thinking about doing more with less, it's less painful a time to have this conversation than it would have been if I'd have been having this in 2008-9. And I think that the last remark that I would make is if we look at the sectoral story, that's where we'll talk about data quality, I'm sure, at some point in this session. But for me, it's the labour market that matters most in a regional sense, is who's working. Obviously, from elected members, it's key from a voter perspective. But I think when we talk about the measurement of things like profit levels, which go into the GDP calculations, there's always some difficulties in getting the precise information, whereas actually counting the number of people in work, where they work, and at what sector they work in, should at least be doable. So for me, I think my focus has always been in regional work throughout the UK and indeed the world. When I used to run it for Oxford, was always on the labour market. So you'll forgive me if my focus tends to be more in that area. And I think the real attention I would draw is that if we look at the total employment figures, so this includes self-employment, which is a little bit patchy in the data, we can see that Northern Ireland lost something in the order of 60,000 jobs between 08 and 12. In 12 to 14, it's got about 25,000 jobs back. Now, some of the data points look a little bit suspicious. The scale of job growth in agriculture and self-employment, for example, looks a little bit higher than I might have expected. But nevertheless, the point that I would want to draw attention to is the number of sectors that are in positive territory. This isn't a recovery based on one or two areas that are growing. If you look at the portfolio of jobs that InvestNI have attracted, they have a particular sectoral focus, as can be expected. But if we actually look at our recovery, we can see jobs in agriculture, in manufacturing, in construction at last, professional services, administrative support, arts and entertainment. It's a very healthy, the word I use, and my staff shout at me for overusing it, but it's a tapestry of recovery. Now that creates us some challenges in policy because it means it's much more difficult to pick winners. It's much more difficult to say, well, these are the only sectors that are going to enjoy growth. We're seeing growth in all sorts of sectors. Now that adds a further benefit for Northern Ireland because in contrast to what we might have feared, say 18 months ago, that this table might have looked like a positive number, but that we would have seen almost all of it in professional services or maybe professional and admin services, which would have had a very acute Belfast focus. There's some encouragement to be taken from these numbers that actually we're getting jobs in agri, we're getting jobs in manufacturing and construction, suggesting, and you can see it in the unemployment numbers, that though the labour markets are performing differently, there's at least a little bit more comfort, in my mind at least, that there are areas of the economy that might enjoy growth, whereas if you'd have had me here 2 years ago, my great fear would have been that we were heading into a period of recovery, but it would have been very narrow in its sectoral focus. So the encouraging nature of this recovery is that it's broad-based, it's in a lot of sectors. That gives us some modest insulation to the challenges that are coming in terms of austerity and cuts. But as you'll see from our forecast, the next 4 years we only have 20,000 jobs compared to 25 in the last 2. So we actually see the high water mark of the recovery being this year and possibly the early part of next. After that, it gets a little bit more difficult, which means that in the era of austerity, which is difficult and painful no matter what way you look at it, it's also potentially, that impact is amplified by what it will do to public consciousness in terms of how much coverage it's going to get in the media, in terms of the debate, and certainly working in a university, the already palpable feeling that everyone may or may not lose their job. That will have a demonstrable effect on the cars that people buy, the houses that they invest in, and for a sector, for a region in Northern Ireland, the public sector, such a large employer, we have to be very careful how we manage this process to provide certainty to workers where we can, to provide clarity about the way we're going to make the choices that we're going to make. Otherwise, not only will it be materially damaging, it'll be more damaging than would otherwise have been the case. So it's a sort of warning there that the consumer and austerity pressures will take the edge off the recovery. But at least we have some sectoral comfort that there's more growth going on than I and I think many other people might have expected would have been the case when we were looking at the figures 2 years ago. That's all I want to say really by way of introduction. Our forecast report, our 6-page coffee table briefing comes out the week after next, and I'll make sure that's issued to all members. We'll also be having an event at the end of January to fully update the wider public on what work we've done, and we'll have all our reports available for discussion at that point, and we'll make sure all of the committee are invited to that event. It's at the end of January. Thank you.
Okay, thanks very much. That was very informative, and especially towards the end, you got more enthusiastic and very, very positive. Just we noticed that the group are talking about changing their name, and you understand you're an independent organisation, but you're being renamed as under the Ulster University Economic Policy Centre.
Yes.
So we do wonder about your independence from here on in. Is there any risk of?
No, I don't think so. The renaming, just for clarity, the renaming is part of the university's full rebrand, and there were 2 elements of our name that the branding team felt weren't entirely appropriate. One was we were publishing quite a lot of global work, and so the Northern Ireland moniker gave us a little bit of a local feel, which, for example, PwC Global and others had felt it made us look like a very local organisation, and we like to think we have international quality research. And the second reason is the branding team had advised that acronyms are not that helpful, and in particular, I was appearing quite a lot in the media as NICEP, and there was no sense that they would have associated that with a university and that quality of research. So they wanted to make sure university appeared, and also that economics was at the start of our name as opposed to an acronym. So it was purely from that. It wasn't actually a decision by us or anything to do with our sponsors. It was presented to the sponsors last week actually. It was actually a decision made by the university within its rebrand, which it's just undergone.
Yeah, you believe it's a positive move?
I do. I think one of the points that they've made that I think's actually a very fair one is that you should have what it says. You should do what it says on the tin. So we are an economic policy centre. So economics should come first before anything else. That's at the heart of what we do. Is we're to provide economic advice. So I think that I was at least convinced on that part of the story.
Okay, that's grand. Right, I have a list of people here down for questions. Danny, you're next. And
Thank you. We've got various questions on all the ones on the list. One, when you were talking about all the sectors having expanded, is there any way of analysing that so that we see what is IT and what is technically? Because I get the feeling that, and we know that 80% are meant to have, the manual is being left behind. Is there any statistics to show us, are we lifting every part of every sector, or is it very much the high-tech side?
Yeah, that's a good question, and actually the only way of really looking at that, the data's not great for that. You have to look at, for example, the productivity within the sectors to compare, and actually Northern Ireland fares, if the data are to be believed, relatively poorly in some areas, for example the headline agriculture number, but does quite well in other aspects of that. in terms of the recent inward investment, we can look at average wages and the data that's recorded, but that's obviously not all that's growing. If we try to look at the subsectoral data where we can really pick out what's going, I would countenance that actually the high end and the high tech element of that is certainly the leading part of that wedge. But I would suggest that we've become a little bit fixated with that distinction in some ways, because we all know that the economy only functions if we have taxi drivers, window cleaners, the hospital surgeon's only as good as the porter that brings the patient to him. And we've actually created a slightly dangerous precedent in Northern Ireland where we've started to stigmatise other jobs. So young people at school, young people being educated are now thinking, well, if I'm not going to get into STEM or if I'm not going to get into a high-end job, my value is somewhat less. And actually the economy won't function without that portfolio of opportunities. So although I haven't done any detailed work on it, I think we'll always need a portfolio of jobs, but certainly if we look at the inward investment data and if we pick out the sectors that have been growing, and if we look at the Knowledge Economy report, there's no doubt that those subsectors are one of the key elements of the growing economy. But I think we have to remember that we've got a portfolio of skills. They're going to work in different types of sectors, and the worst thing we could do is make people in Northern Ireland feel that their only value was if they were working in the high-end sectors. That would be a very dangerous, and indeed many developed economies have reaped the unfortunate consequences of that type of policy, in which they simply can't find people to do other tasks that are still required. So whilst I think it's an important concept to say who are we grasping and who are we attracting, there is a sense in which the overall volume of jobs would remain my first priority, and then the quality of those jobs, whilst important, would be a second-tier issue for me.
Yeah, thank you. And following that and moving into a slightly different area, the social enterprise, the social economy, that's sort of expanding, and in each area, is there another way of looking at that as a sector?
Yes, again, that's difficult because we tend to get the data sectorally rather than from an ownership perspective. There's a number of studies that have been done to try and value the sector. It's also becoming a more complex sector to look at because a number of private enterprises are creating social entities within the company structure. And again, there's some merit in looking at it as a specific sector, but it's fair to say that many elements of that sector are very nervous about, many of them directly or indirectly still depend on public finance. Yeah. So the austerity pressures could be particularly damaging on that sector. So I think it's important that we give cognizance to what the sector does, but equally recognise it's a much more difficult sector now to put a fence around than it was historically. Remember, very importantly, when we record employment, we record the primary activity of the firm. That's how the survey's done. And you can think of many firms, my own included, that do a whole range of things, including very significant, perhaps what you might describe social enterprise functions, even within the firm. But that's not what they be classified as. It's the primary activity. So the stat, you need to look at it more in a bespoke, and certainly the recent reports have said it's an important part of Northern Ireland. But I would have some nervousness about what public cuts might do to that particular element of the economy.
Okay, thank you. On the last one, it was really the relationship between NICEP and EAG, and I think EAG's only met once, if I have it right. Are they very much one part of each other, or they're very separate?
No, that's kind of an interesting tale. I had the interesting experience of being both on EAG. I've just been asked to join as a member to give some of this insight, and then our firm producing some research for them on the competitiveness, which was an odd experience having my team presenting to me in the audience. So I had to obviously declare an interest and stay quiet on that piece. EAG, at the moment, I think it's fair to say, and it's not breaching any confidentialities, had a number of early issues that it had to deal with. Particularly finance was a key focus for it. Corporate tax, it's made some pronouncements on. But it's now in a new phase, and certainly the meeting I attended was thinking about what EAG would now focus its attention on, and it's certainly its direction of travel is now to look at the wider competitiveness piece and see where the business insights could maybe feature into that and tell us where we're performing on competitiveness. And that's indeed the work. They're updating finance work, but they're also doing that. But there is no formal relationship in terms of NICEP doesn't deliver to EAG except in the extent to which DETI wants us to do a competitiveness project. So there's no formal linkages in that way.
Thank you. And thank you, Chair.
Okay, that's great. Thank you. Right, Sydney. Indicate it next.
Thank you very much, Chair, and thank you, Neil, for coming along and presenting to us today. Can I ask, and you touched on it, I think you said the report was with the Minister of Finance at the minute in relation to the small business rate relief has been completed and that draft report has been sent along. Can I encourage you to maybe give us some more update on that today?
Yeah, well, I can't provide any of the final details. All I can tell you is what the research, and we'll be more than happy to come back and speak when the research is published. But effectively, just so members are aware, the study included looking at the recipients of that through the rates database, looking at how much money had been spent by the public purse on that incentive, who got it, what did they, we surveyed them, asked them what they felt the money had been used for, how important it was to their business, and crucially, who they thought should pay for the continued existence of that subsidy. And also then we consulted widely with stakeholders. Indeed, all parties very kindly met with my team, which I very much appreciate. So unfortunately, I can't tell you what the results of that survey are. They should be out in the next couple of weeks, and we'd be more than happy to come back and brief you on that when the results are available.
It is an issue that's businesses find very difficult. That in the profit margins and the rates burden very difficult, especially at this time. And certainly it's something we have all been lobbied greatly over the last number of years, and has been very beneficial. Some of the rates of relief it has been going forward, you know.
Yes, if you look at the economic conditions when it was set up, they were extremely difficult for the private sector. That's not to say they're not challenging now, but they're definitely more positive than they were at that time, and that's the real question. No one would ever expect anyone who gets an incentive or a tax relief to say, well, this is not helpful and I would rather I didn't have it. The question is whether it's the most appropriate at this point in time in the cycle, and whether, taken in tandem with all the other benefits and reliefs that we offer, is that we'll come to corporation tax, I'm sure. But if you're going to offer a number of incentives through the public purse, which is the highest priority? And the thing we always have to, and I'm sure it's a challenge for members as well, is to try and think of, when someone's lobbying you for something, if you were to rank the things that you got, is this the most important one? Because every time they're before you, that will be the most important one. You can't take this away, this will be damaging. Well, you know, that's always going to be the case. So the question is trying to look through all the evidence and say, what was its purpose? Did it serve that? Does that purpose still exist today? And is it, I think this is a real challenge for us as researchers, is we're always focused on a particular question. And sometimes you have to look a bit wider than that and say, well, in tandem with everything else, is this the best thing you could do with public money? It's undoubtedly going to help. Giving money to anyone will help. It's a question of whether that help can be demonstrably shown to have been better than the other things you could have done.
Yeah, that I take your point, but that when you look at set alongside what you're telling us, we've had 2 years of positive results. 2015 is probably not too bad, but going forward, you're talking about austerity, and you're talking about possible interest rate rises and things. And when you tie that, Neil, alongside what the businesses are suffering here, how do you see that going forward, say, over the next few years?
Well, I think, you know, Northern Ireland PLC is going to have a very, very challenging, but the sort of mature conversation we need to have about what sort of supportive environment you want to give. And when we have kept tax rates, both from the business perspective and from the domestic point of view, lower than other places have been able to do. For example, think of industrial derating, think of the other rate reliefs we have in the system. So we have a very attractive tax position compared to many competitors. We're also thinking of potentially adding some more tax incentives into that mix, maybe potentially with corporate tax. We also have quite a very generous and very supportive and very successful grant and support and regime. Now, in a tighter environment, it's probably unlikely that every one of those things is fundable, and none of them, and removing them, is going to be pleasant for the recipients. The question we're going to have to ask as Northern Ireland PLC, and one of our great challenges is to be able to articulate that message clearly, is in the volume of support that we give, which ranks more important than others. And it'll be for Northern Ireland to decide, you know, if you're a corporate tax advocate, you think it provides lots of benefits, but one of its primary things to do is to attract new firms to Northern Ireland. If your key requisite in terms of economic development was to get existing businesses to grow faster, you might choose a different policy tool. And I think that's the kind of mature conversation we're going to have, because we're not going to be able to do all. And certainly in the debates that I've had, be it about small business rate relief, be it about corporation tax, we almost always, whether it's businesses or even from a political or a research point of view, compartmentalise and say, well, this bit's quite helpful to me because it does X, Y, and Z. We're actually going to have to line up all the support and reliefs and say, is this type of regime better than that one? And be under no illusion, that's going to be a tough conversation, and you're going to be lobbied hard, rightly, by businesses that say, for me, that grant support's better. I'm a capital business, not a profit business. I need capital support. Small businesses are going to say, I need my costs down. It's energy prices and rate relief that matter to me. And big corporates and big inward investors are going to say, the headline tax and the effective tax rate, as Dr. Budd said, that matters to me. So you're going to have all these competing interests, and it's going to be one of Northern Ireland's most challenging conversations, because to date I have never seen us ask them all in the lineup. You know, everyone will say the bit that I get from you is very important to me, but would you take it instead of something else? If I'm going to take any of these away, which is it going to be? Which one matters more? And of course, and the last point I'd make, remember that some of the people that we need to get our opinions on are the people who are not here. So we often talk to our own businesses. Quite rightly, they're our most important constituent. But if you believe that there is one problem in Northern Ireland is its private sector smaller than you might otherwise hope, and you would like to have more international business, then the reason that they're not here means that you have to speak to them to see what would matter to them. And that can be difficult because they're not currently voters, they're not currently in the constituencies. But we have to try and bring that perspective as to whether Northern Ireland would be benefited by an influx of additional business. So, you know, I know that's not an entirely satisfactory answer, but I think when you see the results of the work, that's what you have to keep in mind, is we're not only doing the evaluation to say, which you will see in many evaluations, was this helpful and beneficial, and they're going to say yes. The question is, can you tell us what you did with it, and who should pay for it? And I think that's the question that has to be asked pretty much of every business, society, member of the public, and Northern Ireland PLC. Too often we ask the question, is this helpful? And never, how might we resource it? And that kind of has to go into every evaluation from now on, or at least be brought to the fore. So obviously when members see the results, please do come back to us, and we'll be happy to send the member of the team who carried out the research to speak to you and brief you. We'll have to do the same for the DFE committee.
Yeah, I need to highlight a lot of issues there, and certainly we look forward to that report. Thank you.
Thanks, Sidney.
Thank you.
William Humphrey, you're next.
Thanks, Chair. Thanks very much for your time today. Neil, can I ask you, in relation to, in your presentation you talk about the fears and the difficulties that we will have as we look beyond 2015, and certainly many of us will be aware of those in terms of briefings we've had in various guises across our responsibilities here. How can we ease what you talked about, headwinds that are coming towards us? How can we ease those and best navigate through them?
Yeah, well, I think that's, I mean, firstly, it isn't going to be easy. Taking money out at any time is always challenging unless other money comes in to replace it. So the analogy I always use is, how do we approach this exercise as one of, if you like, pruning as opposed to cutting? So how do we make sure that we do it in such a way that encourages better growth in the future and perhaps doesn't just have a sort of swathing, damaging effect? A couple of things I would say. The first one is we're fortunate with some warning, and we already have had warning. So unlike the private sector, in which recession in 2008 just hit and they were completely unprepared, we have time to line up. And one would suspect that there's a lot going on behind the scenes to look at different. I mean, for example, the universities have been written to be warned about the scale that the cuts might come. And that exercise is exactly what we should be doing. Board SNP was Ireland's approach, but what is it going to be at different ranges, different scenarios of cuts, so that we know what we can do in the worst case scenario? Let's not be taken by surprise in any sense. But the more important point I would want to make, and I know this is very difficult, is let's make sure we have the right information to make the right choices. At the moment, the public debate is around budgets that are under pressure, and obviously the Assembly had a very challenging time in agreeing a budget. I just put on record I was delighted to see that one was reached. Nobody expects it to be easy, and we expect to see rows and disagreements, but it was a must that we got something. But actually the public, and indeed even us as advisors, are still a little bit in the dark as to some of the choices that are being made, in the sense that it isn't easy to know what the pressures actually are. I'm only taking the health budget as the most emotive one that was in the press. In all that debate, I still couldn't tell why the budget was higher, why we'd gone over budget. We had some stories about it's an ageing population, or there's more people at A&E. You talk around the dinner table and you'll have people saying, have you seen how much GPs are paid? Or when I used to live in Crossgar, I used to say, well, we've a beautiful hospital, even though I can reach another 3. So everybody's got their own views as to what they think the money's going on. So we need to be very clear that we actually know what we're spending our money on and what we think we're getting for it. So the first question I wanted to know was, okay, we're 140 million over. What did we spend it on 5 years ago, and what are we spending on now? I couldn't easily get that information. I think that's a dangerous place to be in if you think, well, how are we going to cut this? So we'll go straight to thinking about voluntary redundancy schemes and thinking about I'm not sure. If you think of it, we talk about inflation as the big pressure. Well, obviously the key part of inflation in the public sector is wages. Now, nobody wants to talk about that, but I don't know if any other members were surprised, but I find it amusing, not amusing is absolutely the wrong word, I find it curious that in all the conversations about budget pressures, we're going to have less police in the street, we're going to be able to educate less kids, we're going to have less teachers. At no point did it say, well, everybody we have in the system is critical, so the alternative is we're all going to take 4% less pay. Obviously, excluding economics professors, I may add, but that's a subject nobody wants to talk about, and certainly it's not popular in the university circles. But let's be clear: if we're really hitting a financial crisis and we were a business, that's what we do. We'd first of all look to see if there was any waste, and to do that, we need to know what we're spending our money on and what we're getting for it. And then, secondly, if we were all critical to the task, then you might think of saying, well, could we put up our prices for anything? If it's really important, could we charge for some of the services, or could we all, if we're all critical to frontline service, maybe we'd have to look at our pay? I mean, that's what the private sector did. Now, I'm not advocating, I'm just saying that the mantra has to be everything needs to be on the table. That includes how we deliver services. Are we getting, we're going to talk about statistics, are we getting them in the most efficient way that we can? Is service delivered the best way that it can be? And I think the key, if I was in a government position, I'd be making sure I had those cheat sheets, if you like. This is what's going in. This is what we're getting for it, and that's what's coming out. And if you think of the wellbeing work we're doing to try and look at a different measure from GDP, it's all about that. It's about measuring outcomes. Are we treating more people? Are we educating more kids? Are we doing it better? What are the input costs? What's going up? Is it capital? Is it financing? Is it labour? And only if we've got that information can we make a sensible pruning approach. My fear at the minute is we're going very quickly into headcounts, voluntary redundancies, talking about whole scales, when I'm still not sure, and maybe members have more information than I ever see, not entirely sure we know exactly what we spend all our money on and what we get for it. So that's where I would start to make this process to limit the damage as best as possible, is look innovatively at the way we deliver services, look innovatively at the ways we may save cost or raise revenues if we really think that the particular service is precious and that we can't change it. And I think then we might do it in such a way that would be rather more strategic than it might otherwise be if we just fixate on headcounts and headline budget numbers.
Well, you would have heard Leslie in the question I asked him about the corporation tax. In your brief, in terms of corporation tax, you give some forecasts in terms of gross value added income entirely and employment. Can I ask what they're based on?
Yeah, the report that we have with government at the minute remains an update of work, slightly updated methodology, but essentially the work that was done originally for EAG a number of years ago, which effectively is a sort of econometric study of the sensitivity of tax rates to inward investment flows. It also models the behaviour of existing firms. So effectively, if you're going to transfer an amount of money from public service into private service pockets, what will those sectors do with the money? They'll spend some, they'll invest some will leak out elsewhere. So we model that, then we also model the behaviour, the second round effects as you would think of them, as in when there's more inward investment, more firms, what will they buy from, what will the supply chain be? But we also model the costs on the flip side, so what jobs would need to be lost technically, or where would the money come from to pay for it, and what would be the effects of that. And as you rightly identified earlier, that's the big challenge, because that's upfront and certain, and the returns are longer. You have to be persuaded. We've done econometric work, you can look at those results. Plenty of others have done it. You can look at the published literature, and indeed EAG did a review of it. If you believe that lower corporate tax will attract higher levels of inward investment, you need to be convinced of that to believe that there would be any sense in pursuing the policy.
And can I ask therefore, are you guys convinced of that? And is it part of your consideration?
Yes, there would be two. Yes, our econometric work, certainly I would be convinced, and the econometrics would suggest to me that there is a sensitivity to the tax rate. And I take Dr. Budd's points about a race to the bottom, but even at that, even if that was to be true, which it probably is, I'm not sure you would help yourself by not being in it. But if we take that example of am I convinced by the work? Yes, I would be. I would be convinced that it would increase the flow of, we've already seen changes to legislation to prevent some of the monies that Invest can give out under capital grants. You can't fund the same activity in the same way. Well, a tax cut would do that in a way. I would be convinced by that, but I'd say two things just to support that. Even if you don't really want to delve into the econometrics of it, Ireland, it's hard to explain Ireland in any other way. Now, you might think of the skills, you might think of the investment elsewhere, but it seems curious if you hit the biggest financial crisis you've ever had and you have a budget deficit, the first thing you would do, particularly if you believed corporate tax was a second order issue, you'd put it up. But they didn't do that. I find it impossible to explain the Irish experience without doing that. The UK has exceeded all expectations in job creation in the last 4 years. It's way back above peak employment, unlike many of its European competitors. And it's reduced its corporate tax by 7 percentage points. Now, that might be coincidental, but again, it's another little bit of evidence that says to me, I still think inward investment. Look, inward investors do not want to say to you, I came here because you gave me low tax. It's not very corporately responsible. It doesn't sound very good. They will tell you it's the work-life balance, it's the quality of life, it's the staff, it's the skills. But if you actually model where firms go, and let me be clear, all of that, and Dr. Budd said this very clearly, corporate tax on its own won't solve it. If there's no buildings for people to go to, if there's no skills to work in it won't solve all Northern Ireland's economic ills. But in my view, am I convinced it will attract more businesses? Yes. The critical conversation is the price at which you have to pay for that policy. And that remains the key. That's why you don't have the results today, as those negotiations continue.
Can I ask you then, just finally, in relation to, I mean, you talked about renegotiations in the United Kingdom and potential of federalism, and obviously those negotiations and those outcomes will be different in the various nations, because in terms of the strength, Scottish nationalists and whatever in Scotland is particular. So the arrangements will be different. Can I ask you in relation to corporation tax for Northern Ireland? Given the choppy waters that you've cited as coming over the horizon, I mean, is it too much of a risk to do it in that context, or does indeed do you think that provides us with the perfect context in which to do it? Not missing out on a crisis, as they say.
Yeah, well, I think the first thing I'd say to that is the crisis that sits before us is part of the reason why we've even got the opportunity to get the power. So I try to sort of decouple the three stages of this. The first thing is get the power. I mean, even if you're not an advocate of corporate tax, I don't know why you're not lobbying to get the power anyway and put it up. Because then surely you would think the last 4 years of 7% reductions in the UK has been devastating, so why don't you get the power? And if tax doesn't matter, just put it up and you'll have more public money. So I can't see any circumstance in which Northern Ireland would think it would be better not getting it. So the first thing is get the power. The second question then is, what price can you get that for? And those negotiations are going on hard now between DFP and between Treasury. There's experts in from London to help advise, as far as I understand, on the tax complications, which would not be areas I've been expert in. So that's the second question, is how much you're paying for it. When you've got the two of those, then you've got the big decision to make. Is this something that we could do? And at that point, we need to have a big conversation in Northern Ireland and say, if we're going to do this, where's it going to come from? And that might mean the things that nobody wants to talk about, like looking at some of the other incentives we currently offer that we may not need to in a corporate tax environment. At the moment, the business community is assuming that the cost will come somewhere else, but not them. It might also look at some of the other, could be pay restraint in public sector. It could be increased rates at a domestic level. It's a pay bill that has to be, a cheque that has to be written. A number of political members have said to me in the past that the worst thing Northern Ireland could do is get the power and not use it. I disagree with that fundamentally. Get it, negotiate for the best price you can, and then let's have a conversation. For me personally, I would do it, but that's because I'm committed to the fact that I think Northern Ireland is short of a number of the... When I look at some of the brilliant businesses that we have, I think we need more big global international businesses, because I think if we spend all of our monies building up our existing stock, too many of them, at least on the data I see, are domestically focused. And that means they're only going to move the money around. We need somebody bringing in exports. And for me, that means attracting more multinationals. Not everyone's committed to that, and I put that on the table. If you don't believe that's what you want to do, you do something else. But what I want to put strongly on record is, let's take this in stages. Let's not make the mistake of getting fixated on what the cost might be before we get the power. But we've got to find a way, in a way we've never done before, of really engaging, front of the Belfast Telegraph. We need TV programmes to really say to the public and to the business community, you get this, here's another potential, it's going to cost that, and here's the options. At the moment, that conversation's, and I'm not worried that conversation is not fully played out, because I'm an advocate of getting the power while the opportunity presents itself. But this is I hate the term, but this is a big conversation for Northern Ireland, and that's a new place for us. And I think we'll have to think carefully, how do we actually engage people? A lot of people can, like every policy, can see all the benefits and not see the costs. Indeed, some can see only the costs and not the benefits. we're going to have a very wide conversation. But when our report comes out, the long-term benefits, I'm pretty comfortable about the econometrics of that. It's the key short-term costs is the challenge.
Grand, thank you. Okay.
Thank you.
William, thank you. Arshine, you're next.
Thank you, Chair. Neil, thank you. Good to see you again, and congratulations on your name change. A name change is always the first step towards greatness, so I'm sure it'll go well for you. Look, I want to make just a point, just to capture some of the thoughts around corporation tax, but it is really a knowledge economy I want to address and your work on that. I mean, for certainly, I didn't hear Dr. Budd mention a race to the bottom, but certainly those of us who are interested in having corporate tax powers aren't interested in any race to the bottom. Our goal is to provide more well-paid jobs, and that's why I particularly want to talk about the knowledge economy. Our goal is also to level the playing field, and the figure I did pick up from Leslie Budd was the 16 billion being spent on Crossrail in London, which some of us might think is an indirect subsidy to the London economy. And how do those of us who are having that central power, how do we fight back? And one way seems to be that if we could have corporate tax powers and use those to create more jobs and attract more companies. So anything but a race to the bottom, but we're very aware of those dangers as well. On the knowledge economy, it's a bit like tourism figures, Neil. There are as many tourism figure stats in this part of the world as there are figures for how many people are in the knowledge economy. So talk me through those. I was with probably our leading advocate for science, development and innovation and startups here yesterday, and over breakfast he was on the figure of 48,000 and going for a multiplier of almost 2, saying the wider effect on the economy. Yours is slightly lower, but you've given me a nicer graph than he gave me. But talk me through those sectors. Which aerospace you have, growing. Are you putting all 6,000 of Bombardier in there, for example? And then the other figure I'm interested in, communications you have falling. And I think traditional communications, and I presume that's what they're looking at, but it seems to me that communications brings in marketing, and so many people have businesses now. Even if it's a tourism business, 50% of that is really knowledge economy and digital economy. So can you talk us through where you come to this and how confident you are in saying today with 35,000 people in the knowledge economy?
Thank you, and certainly in the interest of fairness, my colleague Richard Johnson should take the credit for both the nice pictures and the excellent research. I wouldn't like to claim his brilliance.
You're not denying him there now, are you?
Well, no, I mean, okay, I appointed him, so look, I'm kind of trying to reflect his glory, but in terms of the figures, yeah, it's a fairly crude measure. It always is. You're absolutely right to draw attention to the fact that there's almost no business that doesn't have some knowledge inherent in it, and in fact, even our most traditional of businesses are beginning to change in the way we do things. It could be the agri sector. It could be, when I look at, say, even administrative support within the university, embracing new online techniques to deliver, say, meeting invites, or the smallest things are all forms of improved knowledge. So it's always quite a crude measure. The measure we've used, which does include just taking businesses with their overall designation. So, whether you're, a riveter in Bombardier, you will be counted. That's a measure that's used. It was really pioneered in San Diego. It's a fairly crude measure. I'm kind of less fixated on the number of, say, 35,000. I think you'd always struggle to get the precise number unless it's a bit like if you hear from Momentum in the ICT sector. They'd say, well, it's very hard for us to measure the numbers because there's an ICT component to pretty much every business. So the number, what I'm more interested in is the graphs of the direction of travel. And what's clear is that if we measure it on a consistent basis, Northern Ireland, starting from an admittedly low base, is growing rather rapidly in the sector. And in particular, again, I draw attention to the fact that it's got quite a broad mix of knowledge activity. So it isn't as limited to perhaps just aerospace as we might have. We are starting to see growth in sectors in the knowledge economy that are complements to that, but also have nothing to do with that sort of heavy industry side. So we have quite a nice, if you take the financial services, the legal services side, you take elements of that, you take elements of the media and entertainment industry. We can see the most encouraging part of the data is, if you look through the report, is in all the indicators, be it on R&D activity, be it on innovation, be it on skills, we're improving. And I think, that's a feather in Northern Ireland's cap. We've a long way to go. But I think it would be fair to say that, we do get a lot of criticism for policy around many parts. There are a number of things we have done that have been supportive of that growth, be it from our regimes of support and encouragement or many of our knowledge transfer programmes. So I think it's actually quite an encouraging and positive story on the report. Just one wee thing I'd flag in it, there was an early indication that the wages may be at least levelling out in some elements of the knowledge economy sector. And although the data is not sufficiently compelling for us to be alarmed about that yet, it's certainly one we've got on our kind of watch list for things to monitor going forward, because it might be that we're attracting different elements of the value chain. So it's one just to keep an eye on, but overall, very positive. It's a direction of travel that's more important than the precise number of. I think any number will always miss people. You know, education's not counted, and maybe it's just my ego talking, but I'd like to count myself in the knowledge economy. But, you know, parts of my sector wouldn't be considered, the same in the health service. So, you know, it's a crude measure, but it's done consistently, and we can see Northern Ireland's growth is very impressive.
Well, look, just come back. I mean, for me, Matt, much of it is what you touched on earlier on when you were saying about the mood out there among people. Do they spend, do they not spend, do they build, do they invest, do they create new jobs? And you were talking about how the new debate around cutbacks, how that affects people's confidence. I think confidence is the big word, and one of the reasons I like to talk about a knowledge economy, and I have been heard to say at Belfast, it's the fastest growing knowledge economy in Europe. And I didn't have to do this sort of data behind it to prove that. But one of the reasons we say those things is it does create an image and a perception of economy and a society which is really on the move. But in this, there are 2 points just I'd like to finish up with. We do need some sort of comparison with our colleagues south of the border, because the places they seem to do well for me, Chair, are entrepreneurship and knowledge economy, using that broad word. And I'd love to find out, are we keeping track with them? They're very good at PR as well, as you know. And I'm keen that we compete on tax and talent. So we need to have that power. But ultimately, if we can't compete on talent, we will end up with lower value jobs. And just really the last point around the wages levelling off. The knowledge economy is such a broad church that if you're designing a website, you're not going to earn the same money as you earn for designing the new Intel Galileo chip down in the docks. So I like the emphasis on knowledge economy. I'm delighted to hear that you think we are, and the momentum is forward. The trajectory is up. And I suppose what we need to know is how we keep that going. What are the new sectors? Maybe that'll come in the time ahead.
Well, I think the point about Ireland's important. It's one of the things on consideration for next year is whether the study within its resources could look at sort of wider European and other comparators to see where we sit more internationally. In terms of continue to impress, you raised the point about talent, and that will allow me a little plug, if you'll forgive me, for the skills barometer work that we're doing, which is to try and actually start to capture the skills needs a bit more coherently than we've done in the past. The tagline for that work is going to be something along the lines of every job matters, to try and get people to understand the sort of composite nature of jobs we're going to need to drive Northern Ireland forward. But I raise that because your point on the knowledge economy is very well made. This is a small place, and talent pressures will come to the fore very, very quickly, and more quickly than we'll be able to respond in education. And obviously, given the financial environment there, that we need to think innovatively how to respond to that. If we can't get the pipeline of people, it's people build. We're terrific on broadband. World leaders in terms of our technology infrastructure. Better than almost anyone else can deliver. It's absolutely crucial to video editing for big data. Brilliant strength, a global strength. Well, office buildings, key requirement as well. But the market will build if the demand's there. Talent is the one area that I would raise to the fore at all times. It's a finite pool of talent. We can train some more, but there's also some we've got to compete for and get them here as a place that they would want to live. So you're right to raise the issue of talent, and hopefully we'll be back at some point in the future to give some sense of, if that sector is going to grow, what's the quantum of people we need to have coming out of our education system to be able to deliver not just that sector, but the supporting sectors, the construction workers, the taxi drivers, the window cleaners that will make that sector function properly. So, I'm glad you raised the issue of talent.
Okay. Thanks, Martin. That's grand. Okay, Stephen, I'm sure you've got all your answers in relation to corporation tax.
Far from it, Chair.
You'll not overdo it.
I'll try not to. Firstly, if I can start off, Neil, by thanking you, because I always enjoy your analysis, and I don't tend to do the flattery thing that often.
Hope you agree with it.
I don't always agree with it, but I think what's important is, I think you're the closest in terms of sort of Northern Ireland public economists, that do the front-facing thing, who are honest about the fact that economics is political as possible. politics. You know, come quite close to paper when you say we're going to have to make a decision. Are we going to be a big state, big tax economy, or low tax, low state economy? It's a conversation our politicians, unfortunately, aren't mature enough. I'm glad you're introducing it, and I think it's key when we come to the issue of corporation tax cuts and everything, and budgets and everything else that we're having at the minute. So I think you're introducing into the conversation a bit of realism that's absent from certainly the political debate and often even the economists that come out publicly, who are certainly telling the truth but aren't often telling us the whole truth, and I think you're doing that. So thank you for that. On some of the specific issues, I'll just start where you finished there. You talked about talent. I think one of my first committee meetings with Daddy in front of us talking about corporation tax cut and why it would be wonderful. And I made the argument, well, yes, we can look at Republic of Ireland, Singapore, but we can actually look at places like Sweden where they chose to invest in talent. They have quite a high corporation tax rate, I think around 25%, but they spend on talent, and be interested in your own thoughts, but I would argue they have a strong economy. If we want talent, we have to invest in it. So as you'll point out, we don't do that if we cut our universities. Or if we choose to cut our tax and fund our universities well, where do we get the money from? So I'm not sure what question I'm asking you, but I suppose, again, as those are the types of conversations we need to be having. And in terms of that low tax versus talent, can you do both?
Okay, thank you, and thank you for the kind words. You know, we've tried to raise it. I think it's really important to decide what you want. You know, in some ways, we've a bit of an identity crisis in all sorts of ways, you know, political as well as economic. You know, Scotland's much more, at least on the face of it, or certainly under Alex Salmond, was very much could see the merits in a Swedish or a Scandinavian approach of a fairly generous public state, free childcare, lots of investment in education, and a fairly large tax base to pay for that. You know, that's a choice. There's nothing wrong with that. You don't have to have a small public sector, but you have to have the tax base to pay for that. The mistake would be to hope that somebody else would pay that tax bill for you. So we've got to be recognise that what we want to do is keep things like water charging away, keep the cost, keep more money in people's pockets, which is absolutely a fine choice to make. You're making an inherent commentary there on what size of public sector you're going to be able to have. So unless you're going to raise taxes in some other way. And I've never been in a conversation ever in which there's an advocation for some form of tax rise. It's just never been in that environment. Now, it's not surprising. Who likes bringing that in? But we've got to get into that conversation about choices. And if there's one thing that frustrates me is that how many reports end with, well, I wouldn't do that. I'm not going to tell you what I would do. It sounds, as Richard Ramsey quoted, it's like a Meatloaf song. But they will say, look, I don't think that's a good idea. Even on corporate tax, I've always remained very agnostic in the sense that I would take any research. I'm pretty convinced by corporate tax myself, but give me something else to model as an alternative. So you raised the important point about education. Now, fortunately, as an independent research centre, I can speak freely on this, although some of my colleagues in the university might be cross. Personally, if you ask me, you've got to be open to every conversation, and that includes the fees that you charge people. If you're going to give people a great opportunity to have a successful job that's going to pay fairly well, the idea that we would choose to educate less people rather than charge people slightly more seems a little bit odd to me, because what are those people going to do? Well, if we're not going to educate them, they're going to go somewhere else to do it. That's just going to lose the money to Northern Ireland. So I'm not sure. You mightn't be an advocate of higher fees, but it can't be off the table. I don't think that would be wise. That would be at least one response I'd make to it. Should we invest in education? Absolutely. We do spend quite heavily on it. To be honest, we're still not getting the outcomes we should. We have a number of schools that are not performing at the rate that they should be, and that's a worry, and that's on us. That's not on anybody else. If our education system doesn't deliver, it can't blame anyone else. So are we getting the maximum for the money? I'm not even convinced that we are. That includes changing the way we deliver courses, the way we teach, the way we engage with the private sector. We need to be getting apprenticeships, we need to be getting work placements with business. Business has got to be willing to invest. The amount of businesses that say to me, oh, you send us kids and they're not business ready. It's kind of business's job. We can do some of it, but we can't fully simulate the work environment. But you're going to stop placements. The government's going to probably go through these cuts. Will it go for voluntary redundancies and protecting the workforce, or will it continue to embrace placements and bringing in new talent and giving young people jobs? You you're the biggest employer. So if the government can't make the right decisions in terms of Northern Ireland PLC, I don't know why they'd expect the private sector to do it. So can we invest in talent? Yes, but it's not necessarily the same case as just providing more money for the talent quantum. We've got to ask ourselves what talent we think we need. That means stopping maybe training in certain areas that we're delivering at the moment. It means tailoring training. It maybe makes businesses are the lowest. The percent of on-job training is the lowest in Northern Ireland of any region. Well, why would that be, given the level of subsidies we provide? I mean, we've all collectively got to take some responsibility for that. So, education is a sensitive area. University budget is very sensitive. But I go back to my earlier statement. Everything must be on the table. That includes what we charge people to study. That includes what contribution businesses might make to training, and it includes the conversation about how we fund our education system. So, talent is critical, but it's a varied and mixed, as I go back again to the point, the dangerous thing we could do is tell every kid in school you need to study STEM. We need STEM, it's at the forefront of our knowledge economy, but we need a lot more than that. How many people are we training to learn Portuguese to deal with Latin America, or to learn Mandarin to deal with the Chinese economy? Those are the kind of trends we need to be looking at in training. So talent, yes, but that's not a carte blanche to more money in talent. It's thinking more innovatively about who should invest in their own talent.
And it ties into a point I made to the Minister when she was in front of us. It's not that, as you say, sort of low-skilled jobs have somehow been, they've gotten a bad press, but we rely on them. My problem is not so much with low-skilled jobs. We'll always need those. My problem is how much those people are being paid. You'll have heard my question around the living wage. Do you think that's something we should be looking at? It's not saying about we don't want low-skilled jobs, but what we don't want is low-value jobs whereby people in work are having to be further subsidised because they're still living in poverty despite working full-time.
Yeah, I think the living wage is a very good point, and I would follow Dr. Budd's comments on this, really. It's how you bring that, the evidence is out there to suggest that actually better levels of wage for lower incomes, actually, they're going to spend a higher proportion of that. They're not going to have the money to invest and for it to leak out. So it's a good thing, absent of anything else. The difficulty we have is if you look at, say, Intertrade Ireland survey, which as an all-island survey is a terrific survey that allows you to benchmark. You should always be looking at that. I would point members towards that every quarter, 500 businesses, north and south. What does it tell us? They're still telling us, particularly small businesses, that cash flow is an issue. So that means what we need to be sure is that we've got the evidence that any transition to that wouldn't see many of our small businesses struggle to stay in business. So my question is, would it be beneficial for Northern Ireland? Is it something we should aspire to? I think yes. As a modern society, you want to have a living wage and an effective. It also makes the aspiration of getting a job. It helps with that as well. Young people coming through in college or coming through in school who perhaps are not going to get to university and get to college can look at and aspire to a job in a manual trade or working in some of those jobs, cleaning windows, taxi driving, and actually look to that and say, well, still, that's going to give me an income that's going to be much better than being out of work. And it's going to add to their aspiration and to their motivation, as opposed to making them feel like they're not going to be a valued member of society. So I would be very positive about it, but conscious that Northern Ireland businesses are already under pressure on cash flow. So the question I would want to know is, from a research perspective, I would say that, is what's the wage component of our businesses, and what possibility would they have to maybe be able to put up prices? And let's not forget, if what happened is you were to pay a better wage to workers in certain sectors and they put up the price for their product in order to keep their margins, that will mean a higher price, which would be okay for those who are now in work, but it's going to be a higher price for those who have no work, which will put certain pressures on, say, for example, the welfare state. So you'd want to know what the mechanisms of a higher wage would be on both the cost of output and the viability of those businesses before making that decision. But if I was setting a programme for government, it would be an aspiration of mine, certainly. I think any modern wealthy society should have that as one of their priorities in terms of how it cares for, as you've identified and I've said many times, actually the core part of what our economy is. If you can't get to the meetings, if you can't clean your, when I got my Eisenhower Award, Colin Powell said one thing that stuck with me to this day, which was, he said, "You're all leaders around the table," and pointed at all of us. I didn't have the heart to correct him. And he said, "Do you know the name of your cleaner?" And I said, "If you don't, you're not a very good leader." And that stuck with me, and I thought, well, we need the people who are coming through school to be just as motivated to get the job as the teacher as they are to be the Colin Powell. And I think that's a great challenge for us, because we've gone down, we're not in that place. and, you know, living wages and caring about every job matters would be a good objective. But as Dr. Budd said, we need to think very carefully about the transition of that, because it could be quite difficult for many firms in the short term.
The answer's Glenda. But in here.
But you?
No, sure, can I squeeze out a bit more? You mentioned all indicators, or sort of everything's heading in a positive direction. One that you didn't mention was sort of poverty levels, use of food banks, and you'll have heard my question to Dr. Budd, how do we have a more holistic view of economy and well-being? Are things heading in the right direction in that regard?
No, there are worrying statistics on that, and there's also worrying statistics that if you look at even the 2011 census compared to 2001, that despite an era of quite generous public money in terms of, say, interactions at the very local level, we still have a lot of economies that have, you know, you've got wards with over 50% of people with no formal skills. You know, there are things that we're still not where we would want to be. The work that we're doing with Carnegie, and again, I take no credit, I'm just in the steering group for that, but the idea is that, you know, like Leslie, I'm conscious of always mentioning Scotland, but one thing Scotland do very well, and they have problems too, but one thing they do well is their articulation of what it is that they're trying to achieve is done on two sides of an A4.
Yeah.
So you've got a laminated poster that's up in the wall that says these are the things that we aspire to deliver, and if you're not delivering towards them, we're not going to fund it. The challenge for me is that whether, and this is relevant to members, is when you come to craft the programme for government and that goes on, would you really be brave enough to say that if we are putting money into something that's not achieving the things we want for Northern Ireland, we're going to stop funding it? That's a brave place to be, but honestly, that's where we need to be. And those aims for Northern Ireland should be more holistic than an improvement in the GDP level. They should be things about, you know, crime levels, health levels, what sort of fairness we want in society. Let's see if we can come around for, you know, they're mostly in the programme for government, but what isn't there is then the feed through from that to actually would you stop funding it? So, for example, if you can't demonstrate this is contributing, then we don't give you that incentive anymore. That's a brave place to be, but that's what should be, in my personal opinion, at the heart of the new programme for government is there are 5 aims for this government, and we're only going to be funding government programmes if we can demonstrate that they're adding value to any of those aims.
A yes or no question, Chair.
Right.
Oh, I'm not very good at those.
Finally.
Finally, is there a level of cost at which corporation tax, and I take your point about we can move different ways, but reducing it to 12.5%, which is the assumption, is there a level of cost at which it becomes a bad idea?
Yes.
Thank you.
Okay. That was a short answer for you, Neil.
Yeah, that's about 20 minutes shorter than my usual response. But
We didn't want to say that. Thanks very much for your presentation and your answers, and it was very informative. Positive, enthusiastic, I've written down here, so very good indeed. We do appreciate the work that you're doing, and obviously the work you're doing on behalf of the Assembly and the Executive.
yeah, we've provided the contact details at the back of all the members and told you what work they're working on, so do please get in touch with any of my team if you want a bit more detail.
Yeah, no, that's great. And I take it you're happy to follow up on any other questions we have in writing?
Yes, please do, and as I say, come to the team. We want to have good engagement, otherwise we can't help Northern Ireland.
Okay, thank you.
Well done. Thanks very much.
Thank you.
Keep up the good work. Thank you.
Thank you.
Who kicks us on then to agenda item 6, matters arising?
Sorry, Chair.
You're all right. Leslie, would you like to? Yeah.
Yeah, okay.
Okay. Leslie, thanks very much. Right, takes us on to matters arising. There are 5 items in the matters arising. Index on page 41, 42 right through to 61. There are a number of issues there. Are members happy that we proceed with the suggested actions?
Yes.
On those? Great, right, thank you. From 42, page 42 to 61. There's quite a bit of correspondence there. We had that insolvency issue that was raised by a member, and there's a lot of correspondence there for information. And it was mainly about regulation, really, of the practitioners. So you can see there that that's an ongoing issue. I think that's the main issue, the main point there, Jim, isn't it,
Yes,
really?
the chair agreed to write to the person concerned last week, but this is to bring the papers formally to the committee because it was mentioned on the day, but the papers weren't available yet. So.
Well, agreed, right, thank you. We've also, moving on, the committee considered correspondence from Coleraine Council last week's meeting on microgrids, which included a map. The committee office has requested a higher definition map from Coleraine Borough Council at the request of a member. Okay, we all agreed with that action?
Yes.
And, right, regarding the committee's call for evidence on the insolvency bill, the department had reported to the committee that the chair of the Chancery and Probate Liaison Committee had expressed some concerns about the provision to facilitate banks to permit bankrupts to have bank accounts. The department decided to proceed with the amendment. One reason stated that not going ahead with a similar amendment in Northern Ireland would deny to bankrupts here the benefits of a measure taken to assist in similar circumstances in the UK under the deregulation bill, assuming the bill becomes law. Are we happy with that?
Yes.
For information. Right, thank you. And are members content that we asked the department for a copy of a letter sent to reply to the consultation response from Chancery and the Probate Liaison Committee? We agreed?
Agreed.
Also asked members if they're content to ask the court service if it is content with the department's response to concerns raised. Agreed? Right, thank you. We're moving on. Item 7 is an LCM then, the deregulation bill. Papers on this item, the draft committee report is page 63. A response from the department regarding the exemption of turban wearing safety helmets, page 65, and correspondence from DARD is at page 66. So, Jim, have you any comments to make in regard to
Chair, there are a number of minor typos in the report, just to correct those before the committee agrees them. Just to paragraph 2, the word, it says reducing the burden or regulation, should be of regulation. 2 references to the deregulation bill which need capitalised are at paragraph 3 and paragraph 7. And then at paragraph 10, it says it's the most appropriate means of extending to maintaining regulatory consistency. Extending to should be removed from that, so that it should read appropriate means of maintaining regulatory consistency. So if members are content with those.
all agreed?
Agreed.
Right, thank you. Right, takes us on to agenda item 8. SL1 proposed guarantees of origin of electricity produced with high efficiency cogeneration regulations. The papers on this are page 81. The SL1 itself is on page 82. SL1 is subject to a negative resolution. The proposed date of operation is 10th of December 2014. Inform members that this is the committee's opportunity to consider the policy set out in SL1, and it is not possible to amend this once the rule has been made. Is everyone content with the proposals?
Yes.
Great, thank you. Item 9, written briefing from Daddy Mineral. Prospecting licence is awarded to Petroleum Exploration Limited. I think it's mainly for information. It's been on the agenda quite a bit this over the years. I think we're getting all these licences now. It's been brought forward as information to the committee. Agreed?
Agreed.
Thank you. Takes us on to agenda item 10, written briefing from Daddy Superfast Rollout Programme. Again, really for information, page 89. Jim, I understand there's a whole brief on this with different BT postcodes.
There are something like 40 pages of postcodes attached to this here, which I emailed to members in case they wanted to look at any individual postcodes, but I thought members would not want me to include those in papers, so
No.
if members are content
Not
with
even
that,
me.
or the committee office does have a list of them if they want to look at them there.
I think it would be useful for members to have a look at that within their own
Yeah.
constituency areas. Take time and have a look, and I'm sure we have been lobbied about issues.
Are they
And,
accurate?
pardon?
I always found the postcode idea of just desperately inaccurate way of looking at.
I know some of our members have expressed that as an issue of concern, yeah. But it's difficult, I think, to have some other alternative that ties it down to, down to streets and laneways and roadways. It's difficult to come up with something that's totally accurate. But it is there for your information. I would commend that members do look at it and liaise with the various companies involved for their constituencies. Okay. Takes us on then to item 11. Sorry, item 11, yes, the National Policy Statement. This was something you brought forward, Martian.
Yes, Chair, two items of interest in it, and part of what I brought up with Neil, I think that south of the border, they're probably more organised in terms of entrepreneurship.
I doubt that, but however.
Well, they certainly boast better, I suppose. That's maybe why they're better at PR, perhaps. But the two areas I was interested in this statement was, one, they were using international comparators, so they were able to say this is where we rank along a scale called the GEDI, and they were saying this is where Sweden is, and this is where Norway is, and this is where the British are and the Americans are, and so on. And I thought that was something that's probably useful for us, because there are so many stats coming here, so many claims, and yet we don't really have a global index to benchmark ourselves against. So I wanted to draw that to members' attention, and Jim may want to give that some thought about how we could progress that, or encourage the Minister to use that index, or does she? It's used on a wider level, but not locally. And then the second thing I was very interested in was they have defined what the environment is in which entrepreneurs flourish, in which new companies are set up, and they call it the ecosystem, and Jim has done a copy of the 6 elements of that. And I'm really interested in that, because I think that is where we can encourage new indigenous businesses. There's been a lot of discussion here now in the 2 meetings have been about foreign direct investment on our big businesses, but I think the ecosystem is interesting, and I'm very intrigued by the work happening recently in different areas, different regions and cities, of trying to bring that hub together, trying all these different elements of what creates an ecosystem in which people can start up businesses, and how you really bring that together. And I would be very keen to continue this discussion to our mutual benefit. They talk here about an ecosystem which includes culture, business environment, innovation, be able to get the money to set up businesses and grow them, the networks, and then access to markets. We have a little bite at all that, but bringing it together in a new ecosystem is something that's being pioneered, for example, in New York, Boston, and other regions. So those are the pieces I wanted to bring the attention of members, Chair. I'm not suggesting that we go to Boston or New York to discover that. Sao Paulo, I believe, is another city for this. But I think it would be interesting to write to the key people who put this agenda together, the statement on entrepreneurship, and invite them up to talk to us, so we can fit them into our agenda at some stage. Perhaps as part of a wider discussion. I know you did have the joint committee here recently.
I find it fascinating, Chair. I'm always a bit sceptical. We see lots and lots of strategy. I'd love to see the actions that they put to each of the 6, because those are the things that we really need to.
Well, I'm sure we can get a.
What about
I still like a hard copy, but I'm sure they could afford us. They're doing so well. I'm sure they could afford us 12 or 11 hard copies.
What about sending it to the department initially for their comments? Are you happy with that?
Yes, I would. And perhaps Jim wants to point up those 2 areas, Jim, rather than the whole report. Yes, I would. But yeah.
Then you may forget about it after that.
We'll come back before the next election, do you think? I'm not talking about Westminster either.
We'll not go there today, right?
So is that, Chair, to obtain the department's views and to ask them for a comparison of between what they're doing here in order to.
You talked about
We're doing a lot of this stuff as well, some just
yeah.
present, but
The comparators you talked about, an index.
they talk about this Global Entrepreneurship Development Index is now the benchmark being used by the Swedes that Stephen's mentioned, and so on. Reduced globally. So at least you finally have a comparator now. We don't have that, but I actually think that there's lots of energy around entrepreneurship here, but I'd really love to know how we're doing. So that seems to me to be important. And then the second bit is, how do we bring together this ecosystem, what they call an ecosystem? How do we bring that together to make everybody on the same, put everybody on the same page? Those who are providing the money to startups, those who want to set them up, the innovation centres, the Northern Ireland Science Park, our friends that are dealing with skills, the idea Belfast City Council has for a new digital hub in the Cathedral Court and so on. I really think we need to find a way to bring everybody together. Alistair Hamilton said last week he had some new thoughts on that, and they'd been over to the Silicon Alley, do they call it, or what do they call it, in Roundabout, Silicon Roundabout in London.
Yeah.
So we'd be interested in hearing what their thoughts are around this ecosystem as well. And then maybe but I'm interested, of course, to continue the discussion with them. So perhaps we could write and ask for these.
Yeah, we'll get it from the department. Thanks very much. Thank you for your input. Right, takes us on then to correspondence. Jim, do you want to give us a bit of a rundown on that, please?
Chair, there's a correspondence index at page 110. There are two issues in particular for members to note. First is an Ulster Bank press release, which is at page 122, and the other thing then is possible ban on house coal and domestic heating. It's at page, I think, 125. That one on the coal is something that the Deputy Chair brought to the attention of the committee. So,
yeah, that is an issue. I've been made aware of that issue as well on the coal. It's just smoky coal, as they call it here locally. And there's an issue, and I understand it's coming through the Environment Committee.
That's the thing, Chair. As far as I remember, this has come to this committee before on a previous occasion, and it relates to environmental regulations. So,
it does, that's right. Something the Republic, I believe, are looking at closely, and it may affect here as well. So perhaps we should refer to the DOE committee. Would every members be happy to do that? Great.
Can I just go in on the back of it? Just as someone and declare an interest in living in an old house, if anyone lives in any old buildings, you take away the old ways of heating them, you're forcing them all to move to modern technology, which doesn't suit them. So there's a whole lot out there that don't fit, so you have to keep that in mind as well.
The other thing, if this was to go through, people would not be able to use coal to supplement their heating.
Exactly.
Which most people are doing in Northern Ireland now because of the cost of oil. So it is a real challenge. It's something I think needs to be addressed. So I think we'll refer it to DOE for...
Chair, you touched on one house coal. They're just talking about the smoky type coal that you're talking about. It's just the one grade of coal. There's a lot of grades of coal.
Smokeless coal now.
It's just, but it's just the smoky coal you're talking about.
Well, it's classified as smoky coal.
But is that all we're talking about here? Or does it entail...
In the main it is. It is in the main, yeah. But it's regulation on coal.
But what they're referring this letter to, they talk about house coal.
Yeah.
A number of grades of house coal.
There are, of course.
So what are we really talking about here? Is it just the smoky coal?
I understand it is.
Right, okay.
Okay, we agreed then in relation to the correspondence.
Sure. Right. There's one other item tabled today, an invitation to the Future Students of Business Awards 2014 at Titanic Belfast on Monday the 8th of December. That's in table papers, so if members want to contact the committee office if they would like to attend that.
Right, thank you. Takes us on to the Forward Work Programme. There's a Forward Work Programme takes us up to the 9th of December, page 128. There's an updated one, I understand, in our table papers. Numbers agreed on that, thank you. Item 43 is an invite from...
Chair, there was in there the chairperson had spoken with the
Yeah.
CEO of Wrightbus, who has invited the committee to visit Wrightbus, so if members are content to include that in possible items for the future forward work programme, and then can be decided at a later date.
I think that'd be good too.
We'll take the bus, or,
Pardon?
will we take the bus to that, or?
Oh, I would
or
have
bike?
to.
Keep
Stephen,
going, keep
Take a
going.
bus back.
would you be happy with that, Steve? Would you take the bus? Right, great.
No reason why not.
Thank you. And that takes us on to item 14. Any other business? Jim, have you any points to raise?
No, Chair, unless members have any other items of business.
Very well chaired, I have to say. Absolutely. We're going to be out of here before. At the start, I finished just yet.
That's the way it should be.
One item.
Okay, is that
Date
it?
and time, please, the next
Date
meeting.
and time of the next meeting, Tuesday 25th of November in room 29. God willing, we'll be here at 10 o'clock sharp.
What Spurs?
Or before, maybe before that, Jim, you'll want it before it to get the questions sorted. Thank you all very much for your contribution, and
Sorry, we're moving into closed session now, Chair.
we now have to move into closed session, fortunately or unfortunately, to deal with the